Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and welcome to Friday, 800-951-0592. It's all about jobs today. So they were thinking, hey, it's going to be less. And I guess it kind of was. It wasn't less enough. The government's payroll number, this was a November number, came in at 263,000. So that was above. Most people were in the low 200 range. You know, yesterday I told you we'd probably see a pop in gold and silver if it was below 200. Now we got 263. Silver's up. Silver's up another 20-some cents here, almost $23 right now, $22.87. Gold is down about $13 right now at $17.88. 263,000 jobs. They did revise September's number lower by 46,000 to make that new number 269. Then they revised October up 23,000 to 284, and now this one 263. So really, if you take September, October, November, according to the government anyway, yeah, it's about the same. That's about what we were having, just a little bit under the average, but still too hot. But inside, right? And really, and again, it does matter how many, but more importantly was unemployment, unchanged at 3.7, but the real big number was wages, right? How big and how much did wages grow, and it was hot again. So this is not what the Fed wanted to see here. Payrolls up, and think about what I'm saying here. It was hot again. Yeah, it was up 18 cents. Yeah, 18 cents. That's considered hot. That is 0.6%, double what the expectation was. And over the past 12 months, earnings are now up 5.1%, which was way above what they were expecting at 4.6%. Which really goes along, I would say, with what the Fed has been trying to say. We're slowing the pace down, but we got more to go. And I think this is probably signaling, and Jason said it yesterday. Hey, we're going to get that rate hike on the first couple of days of February. We're going to get another rate hike in the middle of March. And I think this report here probably cements that likelihood that by the middle of March, that Fed's funds rate's going to be, between 4.75 and 5%. Yesterday we saw this, man, the bond market. And again, I'm not a bond market expert. Maybe the next time we have Joey on, maybe he can give us some help here. By the end of the day yesterday, the 10-year note was yielding 3.51. I mean, that'd be 30 basis points below the Fed's funds rate. So, but even with this number today, 3.60, the Fed's funds rate's 3.83, and we know in 2 weeks, in less than 2 weeks, the Fed's funds rate is going to go up at least another 50 basis points. And very confusing. Obviously, what does that mean? Well, why does that matter? Why should we care about what the 10-year note is yielding? Because what the bond market is saying is, hey, these jobs numbers, get ready for them to get bad really quickly. They see something up ahead much differently than what the data at least is showing right now. But the government did agree that most of the jobs created were in that leisure and hospitality, and then food, service, and drinking places. If you added those two numbers together, so that's your hotels, your bars, your restaurants, right? Your places like that. which we know historically those are the lower paying jobs. Well over half of all the jobs created, 150,000 were in those category. Healthcare up 45,000, and then ambulatory healthcare up 23,000, hospitals up 11,000, nursing and residential care up 10,000. Unfortunately for us, most of those jobs are the lower paying, because what are they looking for? People to change bed pants, change sheets, things of that nature. In the higher paying sectors, not a lot of growth at all. They did say manufacturing was up 14,000. Financial activities only up 14,000. So that was kind of the breakdown in the government jobs number. They said that of all the major categories they tracked, all had at least some form of an increase. So that's the number today, 263. Still too hot for the Fed. I'm sure they didn't like it, but I don't think that alters anything they're going to do. We're going to get that 50 come here in a few weeks. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Silver's now up 36 cents, $23. Here we go. I'm holding the sale from yesterday. Silver dimes. They're at $120 a roll. Silver quarters at $240 a roll, right? The dimes are a $5 face value roll. The quarters are a $10 face value roll. Silver half dollars, also a $10 face value at $265. $20 gold. Listen, gold's coming back here now, down $10. $17.90. $2,095, and we're holding off on a price increase on those items as well. So all four items still available. Add to them with the numbers we got today. I don't think changes a whole lot, but it's other things, other signs. Blackstone. Now, Blackstone, not BlackRock, Blackstone is one of the largest real estate income trust that we have. They're talking about over $69 billion of quote-unquote assets, something really interesting. Yesterday, Blackstone started blocking withdrawals from its real estate investment trust as they had a sharp rise in redemption requests from investors. So this is a new development now here in housing, because we've been anticipating, right? Hey, are these investment guys, are they going to hold on? Are they going to be snapping up some of this real estate? And at least, and this, if this is happening to Blackstone and they're the largest, I'm sure it's happening elsewhere. They are limiting redemptions of their REITs, saying that shares were down almost 7%. Investors fear the news could spark further redemptions, right? Obviously, when you come out and say, hey, we're going to block redemptions, that gets people worried. But it is a very interesting development in this real estate market. And again, I don't know. I still going to stick to my guns with real estate's going to be down, but not necessarily out. I mean, listen, sales are going to be terrible, as we know, every month here. So December, January, February, those were really big months because everybody was trying to buy a house, because remember, the Fed didn't start raising rates until March. That was a really, as these numbers come in, I would not be surprised at all to say, hey, real estate sales down 50%. What was the last number? I think the last number we just had, we just had it the other day. I want to say it was down like 38%, and I expect that number to elevate. But if people start losing jobs, then this news out of Blackstone today, obviously is not good information for the real estate sector. So we'll continue to watch. I don't have any other updates on it, but other than they are going to block redemptions from their real estate trust business. Blackstone, like I said, $69 billion worth of real estate. So an interesting development, just another one of those things that we are going to have to be aware of. Also, in our government, they've added another $45 billion to the budget deficit for 2023 in extra military spending. And I'm sure we can put that caveat, right? That's probably all to do with Ukraine. And then the Biden administration added again now, saying that they may have to go back to the strategic oil reserves. Listen, I don't know about this one either. Chevron CEO came out yesterday telling whoever would listen that, hey, don't do that again. We're already in a tough spot. Chevron CEO, the SBR is at a level where we wouldn't want it to see go any lower. The Biden administration, they put these things out there so nonsensical. Well, we'll start filling it again when oil goes to 70. Okay, now wait a minute. Oil's at like 85. And then you're saying, listen, we need to tap the oil reserves even more as heating prices are getting out of control. The last two reports, since they stopped pulling from the reserves, crude oil's down on average about 7 million barrels a week. So I don't know how long we can go with those type numbers. But Saudi Arabia said today that they're trying to put this Russian price cap deal together, another idiotic idea. That Saudi Arabia is saying, hey, if you're going to do that, we're going to cut oil production even more, because they're trying to say, hey, we'll only buy Russian crude at $60. Well, I can tell you right now, I'm pretty sure the Russians will be like, oh, well, then don't buy any. And a big game of chicken already VW. Here's the problem. And this is why I say idiotic. They're talking about energy prices in Europe are getting so expensive that they're unable, like electric batteries. Hey, we're unable to produce because the power costs are so high. Think about how high the power would have to be. I mean, what are you talking about? I don't know how many batteries you can make a day, right? And I truly don't. I mean, I would be guessing. But let's just say they can make, 500 batteries a day. How expensive is the power that you're like, okay, you know what? Yeah, it makes no sense to make them anymore because it would make the cost of the batteries too expensive. I mean, what type of price are we talking about? Right? Are we talking about adding, $5,000 a battery to the cost? I mean, what type of power bill would it have to look like? But this is exactly what they're saying here in Europe is, hey, this is how high these energy costs are. And, of course, you're not hearing this anywhere. Nobody's talking about it. And I think at the end of the day, this is another huge problem when you talk about what else aren't they making. We know about fertilizer, right? A lot of those fertilizer companies, hey, they've got a number. Hey, when the cost per kilowatt hour gets to this number, shut down. VW is now saying, well, listen, when the cost of the kilowatt hour gets to this number, hey, we're shutting down. And if we see this happening, because winter's just getting started, a very, very confusing time in these energy markets. And I just don't understand the logic with the Biden administration. These guys, I don't think this is a comedy of errors. It's deliberate. There's no doubt in my mind. Why are we not drilling everywhere? We don't need to tap the strategic reserve. Heck, we didn't need to tap it to begin with. We're talking, and you got to remember, what are we really talking? About 1 million barrels a day. Now, that's a lot. Let's not kid ourselves, right? We produce 11 million barrels of crude oil a day. So we're talking about, a little under 10% increase. That's doable. We can make it happen, right? We want to spend $45 billion so we can build more bombs to give to Ukraine. But we can't sit there and figure out a way to spend, what were we talking? We probably have to spend, I don't know, 2 or 3, 4 billion, maybe 10% of that number to get an extra 1 million barrels a day. And of course, the problem is even if we were able to produce it, do we actually have the infrastructure to get it out of the well and to where it needs to be? Because once again, they've been blocking. Can you imagine if the Keystone Pipeline was open as an example? And that's not even our crude. It really, I don't know. I am very, very confused. The bond market is worrying me. And again, maybe the bond market, maybe that's one of the things they're looking at. I think that, hey, as a whole, we're seeing a lot of weakness in a lot of areas that are now starting to, we're starting to get a little bit of that creep. It just hasn't come to jobs yet. We'll keep watching. Silver now over $23, 23.05, up 40 cents. The Dow's down about 165 points, kind of flat. The Dow's been flat for the week. Like I said, the jobs number was hotter, but not really that hot, kind of in line with what it's been the last 2 jobs reports. The one thing that was hotter, though, that wage number, which again, I think is not a good thing. Credit Suisse back in the news. Okay, so here we go. Which bank is it going to be? Earlier this week, I was telling you how one of the analysts out there was saying, hey, the central bank's being a little dishonest with us when they report the amount of capital that our banks have, and that number just over $2 trillion, $2.2 trillion. And the analyst is like, well, really? He goes, really? That's not true. Because about $1 trillion of that stuff is money they owe, and it's really about $1.2 trillion. And then, oh, by the way, and let's use Blackstone as the example here, right? Investors pulling money out of their investment REIT. Hey, if you actually marked to market, which they don't do, we know this, that we know they don't do it. Of course, that's what happened in the financial crisis. What happened to Lehman Brothers? Well, what happened was those derivatives were marked at full price. Lehman had a liquidity problem and was forced to sell those derivatives. Well, when they sold those derivatives, not only were they not worth what they had on their balance sheet, and actually they're not even on their balance sheet, so I just misled you there, but they weren't worth what they said. In a lot of cases, they were getting 30 and 40 cents on the dollar for them. Well, all of a sudden, that makes all these other derivatives. Now we know the value of these derivatives for all the other banks and financial institutions. And come to find out, now Lehman's gone, now Bear Stearns is gone. Now we got to bail everybody out. And according to the analyst, yesterday or the day before, he says right now the banks are underfunded by $1 trillion. And again, we're not done. right? We're not done with housing yet. We're not done with commercial real estate yet. Are we going to see job losses? If we see job losses, are we going to have problems in the credit card derivative market, the car derivative market, on top of the housing derivative market? It's going to be interesting to find out, but Credit Suisse, they may be the one that starts it. So they announced another round of layoffs and had to come out on TV to ensure people that the bank's liquidity was improving, which just tells you there's a bank run going on at Credit Suisse. We'll talk about that when we return. 800-951-0592. We'll get back to Credit Suisse in a minute. Silver up 45 cents, 23.10. Gold is now only down 17.93 and rising. $20 gold, $2,095. That is the same price back when gold was $17.40. $17.93 right now. Great opportunity there. The dimes, quarters, half dollars. This is absolutely on fire sale right now compared to where silver premiums and prices were. This is cheaper. Think about this. This is cheaper than when silver was $18 and change. I mean, we're talking almost a $5 move in silver, but at least we got a little bit of selling that occurred. We got some markets to open up a little bit. So rolls of silver dimes. You get 50 silver dimes, $120. 40 silver quarters, $240. 20 silver half dollars at $265. You get one of each. They're $625, and you have yourself 110 barterable coins because it's a foregone conclusion now. The digital money's coming. And if you think that ESG and carbon footprints and all this other thing isn't coming with it, you just have no clue of what's coming down the pipe here. Get this barterable material. Well, you can. 800-951-0592. And again, look out for 1840. That 1840 to 1850 level in gold sets off a bunch of technical stuff. And I just bring it up because that's when the computers, right, they just do their computing, right? They're not focused on it. They just see, if it does this, buy. Sets up, and from a technical perspective, you could say, okay, we talk about all-time highs. What are we talking about? From a technical chart perspective, you could see $2,700 gold based on gold clearing that 1840, 1850 level. So again, I'm extremely confident. The bottoms are in. I told you that, really beginning about a month ago, and I continue to say it. I think there's a lot of positive momentum getting ready to happen. And then when you hear from the CEO at Credit Suisse, remember, there was Credit Suisse actually broke the rules. All these rules that they say they put in to protect us, they're all lies. They're just lies. They broke them. They actually were essentially insolvent because they didn't have enough liquidity. We're now learning how little it really took. Because I was thinking, man, how much people had to take out hundreds of billions of dollars. Apparently, according to the CEO of Credit Suisse, earlier this quarter, they had $90 billion of withdrawals. That's it. Think about $90 billion? That's all it took? I mean, I got to imagine just a small little portion of their derivative housing markets probably down $90 billion. I mean, come on, that's unfortunately that should be a huge number. Really isn't when you consider Credit Suisse probably's got a derivative size of, I don't know, 30 trillion, 20, 30 trillion, and just 90 billion of withdrawals. Now they're trying to, listen, I always get nervous when they try to make you feel better. But the CEO is saying that they anticipate the run for right now to be over and that they're quote-unquote confident that the larger shareholders are now going to hang in there with them. I don't buy that for a second. But it is interesting. And really, as we put these pieces together, because I'm like, what is going on with the bond market? How is this possible? Why is nobody talking about it? Right? How can the 10-year note be yielding so far below what the Fed's funds rate is? Look at it, it's falling back again, down 3.58. And we know that the Fed's funds rate is going to be between 4.25% and 4.5%. And I got to think it's issues like these because really, let's face it, they're really focused. They're really focused on the debt markets, and that includes these derivative markets. And I'm really kind of shocked to say, boy, 90 billion caused that. I mean, what would happen, as an example, just to call me crazy? J.P. Morgan, $60 trillion derivatives portfolio. $60 trillion. Well, what if they had to mark that down 10%? Well, that'd be a $6 trillion loss. 5%, $3 trillion. Now, 90 billion wouldn't take out J.P. Morgan. But what would? 3, 4, 500 billion? Would $1 trillion take them out? Probably, yeah, right? I mean, this is how little we're talking about here. And again, depends on jobs. If you think the job market isn't going to cool off, then buy stocks, right? If you think that the job market's going to cool off and you know what, we may start losing jobs, you better be buying gold and silver. 800-951-0592. We got the, by the way, yeah, every time I look, the silver screen is going crazy. Silver's now up 52 cents, 23.15. Remember, I told you yesterday, the silver's weird. We had over a 5% move yesterday. Looks like we're going to add another 2-3% here today, maybe more. But from chart perspectives, I wouldn't be shocked. Silver could run all the way to 23.75 before any computer would say start selling. So we'll watch here. We'll continue to watch the prices here. Rolls of silver dimes, 120. Rolls of silver quarters, 240. Rolls of silver half dollars, $265 at 800-951-0592. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Silver still 23.15. Gold 17.94. So gold continuing here to move back closer to positive territory. Copper. Big spike in copper lately. Copper back to almost $4. So copper adding almost $1 here in the last 30 days. The Washington Post now says that Americans, instead of eating a traditional seasoned dinner, which is now unaffordable, they should look to eating bugs. And we've done this, in the UK, their largest supermarket chains have been buying edible insects to start putting on their shelves. And I guess coming to a store near you? I don't know. I can't imagine. But according to the Washington Post here, meals like salted ants. Yeah. Boy, can I get some of those? Ground crickets. Boy, that sounds really good. You know what? Hey, we'll just ground it up and we'll throw it in the fryer. Don't worry. We'll keep your cholesterol high. We'll fry it up for you. Consumers can already find foods like salted ants on Amazon. You can get cricket powder protein bars. Well, I guess you got those. Those are in the Swiss supermarkets. Those aren't here, but they're available out there. Yeah. So make sure you get on your Amazon, get your ants ordered, because you may not be able to afford anything else. According to one person, now I don't know who this is. It's not that bad. It kind of tastes like kettle corn. So at least they didn't say chicken. I mean, right? Kettle corn. Apparently, it could be really, really good. As apparently in Pennsylvania, they're trying to encourage people to start eating ants and crickets. As a crowd was gathered to watch a woman eat fried worms. Now, apparently, fried worms taste like kettle corn. Listen, I was a kid. I ate a worm. You know, because, I think I got a quarter. Right? That just tells you. Right? Back in the mid-'70s, hey, 25 cents, you know what I can buy? I can get a pack of baseball cards and a candy bar for a quarter. You know, heck yeah. It doesn't taste like kettle corn. Now, granted, it wasn't fried. It tasted like dirt, if you want to really be known. But yeah, enjoying your insects to help break down barriers, right? Just to get get used to the new standard of living for us. You know, and this is exactly, what we're talking about here. And again, think about with this digital money. Well, you know what? In order to keep your carbon footprint and your ESG scores in line, you're going to have to be buying salted ants and crickets to make up for, because you know what? I see here you had McDonald's, right? And then you bought beef at the store. I mean, that's not any good. Right? Oh, wait, and you didn't buy the fake beef. No, you bought the real stuff. Yeah, and you know what? Your air conditioning, you had that thing set too low. You had it was too cool. What are you doing setting your thermostat at 76 degrees? That's unacceptable. Right? And oh, by the way, you still got a gas car. So, we're going to just start blocking you and forcing you to, if you want food, hey, the only thing you can buy here are going to be these insects. Unless, don't worry, hey, you're wealthy and you can pay a tax. Then you won't have to eat your salted ants and your ground crickets. I mean, this is what's going to happen. I mean, it is plain as day. That's why I said stock up. Right? Because if you don't want to eat ground crickets and salted ants, you better have something to trade with somebody who can afford to pay the tax. 800-951-0592. I know it's Friday. You think listen, it sounds hilarious. This is what is coming. This is what is coming. There's no doubt about it. This is the ultimate weapon, and if you think the government isn't going to use it, think again. That there's not a chance, and you know what, that's not going to happen when they get full control of this thing. And like I said, $90 billion almost took out Credit Suisse. That was all it took. That's all it's going to take. So I don't know. We're just going to have to wait and see here. 800 800-951-0592 as we're wrapping up the week. It's been a big week here in the gold and silver markets, getting over some key technical hurdles. We got significantly higher highs this week, higher lows this week. And now we've got new higher highs. Gold, now 1796. So gold getting ready to go into positive territory. Silver up 56 cents now, $23.20. So silver now breaking $23. And you know how silver goes. Okay, next target, right? $24. Break 24, then we go to 25. And when we're on watch now, that 1840 level, buy all the gold you can before it gets there. 800-951-0592. Final segment coming up. 800-951-0592. $20 gold, $2,095. And all the utility silver on sale as well. Silver dimes at $120, silver quarters at $240, and silver half dollars at $265. Man, how about this one? We haven't talked about water lately. The problem hasn't gone away. Matter of fact, the government is out saying that Lake Powell, things continue to deteriorate. They're saying that another 38 feet down at Glen Canyon Dam, at that point, the surface would be approaching the very top of the 8 underwater openings that allow river water to pass through the hydroelectric dam. So at that point, 38 feet away, they'll have to shut it down because the air can't get in there. They're saying that, I can't believe they're not even doing anything about this yet. They're saying that this is likely to happen in 2023. 4.5 million people get electricity from Glen Canyon Dam. 60 years of use, risk of destruction from air bubbles. So that's why they would have to, at least this article is saying this is why they would have to turn off the power. Then below that, there's another pipe to let some water through, but not at the amount that would be needed, and causing what they'll call a dead pool in the lake. And right now, 1 in 10 Americans get water through, obviously, the Colorado River. So 4.5 million people. Now, all of a sudden, that power's got to be bought somewhere else. Could you imagine what that will do to power prices? Not to mention, obviously, agriculture and all of the other things that you don't necessarily think of right away. Food prices would be astronomical. And the fact of the matter is now we're down. We only got 38 feet left. And according to the government, we'll hit that number this summer unless something's done. And again, like I said, I don't know. I mean, this is another one of these totally avoidable things. They've been pulling way more water than the Colorado River could ever really produce, like to the tune of like 4 million acre feet. I mean, and essentially that's what they're saying. Hey, by the way, we got to cut it to that level to get there. We've barely scratched the surface of it. Arizona's taken some huge cuts, but the problem is that was a drop in the bucket. That was like 700,000 acre feet, nowhere near enough. This next round of cuts, I mean, we're talking about places like Yuma, Arizona. For a lot of people that don't live in Arizona, you're like, what? Yuma, Arizona? Why do we care about Yuma, Arizona? That is leafy lettuce country. It provides most of the leafy greens for the entire United States in the wintertime. And then, of course, California. Listen, no water, no food. You think food prices are expensive now? I don't know the solution. I'm just saying another one of these things to look out for. 800-951-0592.